Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late, mid-Friday morning on March 14th. So from a position trader point of view, meaning intermediate to hopefully longer term, nothing's really changed this week. We're down further in the indexes. We are bouncing today as I record this, so we'll see how that goes. But, you know, the intermediate term evidence is pretty much all negative. If you're looking at the indexes, if you're looking at individual stocks, not just former leaders, but also I think coming into today we had 70% of the S&P 500 and nearly 80% of the S&P 1500, which is small, mid, and large caps, below their 50-day lines, and you have more than half of stocks below their 200-day lines. So no surprise really, just given what's gone on here the last 3.5 weeks. We're in a downtrend. Now, I don't want to play this up too much, but I know some people are not as, some people are a little shorter term and stuff, but we are seeing some rays of light here near term. Okay, number one is sentiment, which sentiment takes time to change. If a stock falls from 100 to 50, many people will say, hey, that's cheap. If the stock stays at 50 for 6 weeks, well, then all of a sudden it's a dog, so it's just it takes time to change. We are seeing some signs out there like the Investors Intelligence Survey, which is just a survey, it's just sentiment, but it is kind of the granddaddy indicator sort of on that, in that realm. And there's more bears than bulls, which usually happens near a low, maybe not the low, but some sort of low. We are seeing a small positive divergence, which we'll look at in terms of the broad market. The peak of selling pressures came about a week and a half ago, actually. That can always change. The selling can really intensify, but so far that's encouraging. And then I don't want to make too much of this, any of the short-term stuff, but we are seeing some of the former glamour stocks that got killed or hit very hard kind of stop going down, not just in the last 2 or 3 days, but the last couple of weeks. So that's kind of like a week and a half ago when the peak of the selling pressures were. So we're starting to see a few of those. It wouldn't surprise me if we're getting close to a near-term bounce phase. If you're short-term, some of these things could bounce very nicely percentage-wise, so have at it. For me, I'm really looking to see if the wheat can separate from the chaff, if we start to see some strong buying pressures in some potential future leaders, that sort of thing. But for the here and now, we just remain defensive in Cabot Growth Investors model portfolio. We're more than 80% cash. We could do a little nibbling if we see a bounce and some stuff looking good. But in terms of any real, buying spree, we're going to need to see the trends turn up and obviously some fresh leadership form. Okay, let's hop into the charts. I'm going to start today with stockcharts.com. Okay, and the reason I want to do this is because I can't on Market Surge show you the new lows, and I just want to show this real quick. And I put this in my Wealth Daily this week. Or I think maybe Ed took it too, but right here goes back a few months, but during this down move, you can see since February right here, this chart down here is just a performance chart of the S&P 500 and what it's done in the last, whatever this is, 3 months ago. The peak in the number of new lows on the New York Stock Exchange came on March 4th. Okay, it was 290 or something like that. And obviously since then, the market's off another 4 or 5% in the S&P or the Dow. It depends what you're looking at, but it's down. Okay, it's not like the market stopped going down back then. But despite that, we really haven't seen new lows come close to that. Now, Mike, what if we come in next week and the market falls 5% in a day and new lows are like 1,000? Totally, it could happen. It's not a buy signal. It's just a condition that's telling you that, hey, the longer it goes on, if it went on for 2 or 3 or 4 weeks, it tells you, hey, maybe the selling is drying up here. So it's more of descriptive than predictive at this point, but I do think that's interesting. And that's on the New York Stock Exchange. But even if you looked at, say, just the number of new lows on the in the S&P 500, right? Because it's like, well, what about the big cap stocks? Same sort of thing. We hit 40 on March 4th. Yesterday, which would be Thursday the 13th, we hit 30, but not really that close to it. Okay, so we'll see how it goes. But this is sort of a typical thing that you would see near a low, and eventually, like in bear markets, when the new lows are hundreds and hundreds and it's bad, you'll see it oftentimes play out over many, many weeks. Okay, so it's just a sign that the selling pressures are drying up. Right now, I would just consider it sort of a short-term ray of light that maybe we're ready to bounce, but just something to keep your eyes on. Okay, so now let me do this. Talk amongst yourselves. I'm going to get up Market Surge here. Okay, now we're using Market Surge, which is a product of Investors Business Daily. You can learn more at marketsurge.com. Okay, so just going through the indexes, of course. My main thing at this point, we're below the 200-day lines, and our longer-term trend model probably is going to turn negative today, like at the close. What does that mean? Not that much. I mean, it's our most reliable indicator, so I'm not saying, oh, geez, it doesn't matter now. No, I'm saying it does matter, but it's more of a background indicator. So the way I would say is, like, say we did rally, you want to be a little bit skeptical of it at first, even if the intermediate term trend turned up at some point and the longer term trend was down. You want to deal with that a little bit differently. Okay, all it's telling you is that there's been a lot of damage done, which will probably take some time to repair. We're obviously already defensive, more than 80% cash, so I'm not going to make any moves on it. But, you know, below the 200-day line, not good. But we'll see how it goes, okay? More important to me is sort of, we're very stretched below the moving averages here on the intermediate term basis, and the trend is clearly down. At some point, we're going to get a bounce, and it's going to be, you know, pretty ferocious is my guess. You know, you're going to be up 5% in a day in the indexes and 12% on certain stocks. So if you want to play that, there's nothing wrong with it. And I would say even with the NASDAQ, again, this is very, very short-term, ray of light sort of stuff. There's been a little bit more. This week has seen, since the Monday plunge, this week has been a little bit more like volatility without price progress lower. Now, it's been 4 days, so I'm not going to, you know, throw a party over that. But, you know, it's kind of like a micro version of this, where after a big run, the market was going up and down, up and down, up and down, but couldn't go anywhere. That's a sign that the buying and selling pressures were evening out. The sellers were stepping up. This, on a very, very, very micro basis, you know, could be an initial sign that the, you know, the selling pressures are a little sold out. Some of the buyers are stepping up, that sort of thing. Either way, though, trend is down. We won't spend too much time. I mean, you know what's going on in the indexes. S&P below all its moving averages, but stretched and trying to hold up. The other thing too. Again, this is, I hesitate to say this because it can get wiped away, but just very, very short term. You know, the NASDAQ has stopped underperforming the last couple of weeks. These are just things I'm just keeping an eye on. You know, it could go away tomorrow, later today, but if it goes, you know, a week from now, 2 weeks from now, all of a sudden it's like, well, it's the NASDAQ's actually starting to outperform a little bit over 4 weeks. So it's just sort of nascent, but let's see how it goes. S&P 500, you can just see the action here, same sort of thing. I'm not going to get into, I know a lot of people now when the market gets volatile, it's like, well, you know, you do this and then you add the chart thing and the target price. And I would stay away from that. I would just take it on a day-to-day basis. The market's going to do what it wants to do. It doesn't have to follow targets or sentiment or any of that. And so far, you know, heading lower. Small caps, you know, same sort of thing. They're sick. Mid caps, obviously, getting hit. The New York Composite was holding up better, and it is holding up better, relatively speaking. It's still hanging around the December and January lows. So, you know, if you want to focus on that, that's good. But either way, it's still below its moving averages, okay? More than that, we're still seeing, the problem is if you're trying to get too short term, which of course I've talked about a bunch, but if you're trying to take action on that, like this is the RSP, which was the equal weight S&P 500. So it's not super weighted to Apple, Google, Microsoft, and all that. Earlier this week, I think it was on Monday, or maybe it was last week, but it was showing relative strength and trying to hold the 200-day line. But then what happened in recent days? Well, the sellers just came around for the average stock, you know, and like some of the other stuff started holding up. So until things sort of bottom out and actually show some strength, you know, even on a short-term basis, you want to be careful. That said, the reason I am showing this is because this is the relative performance. So this is RSP, this blue line, versus the S&P 500. So it's equal weight versus market cap weight. And I don't read too much into it, but it has, you know, in recent weeks certainly been trending higher. Will that change? I don't know, but just something to keep an eye on. And this hasn't been just for a week or two. This has really been since mid-February, since the top. So, you know, maybe the broad market is, maybe we're setting up a situation where the broad market can finally help lead the market when we come out of this mess down the road, okay? Just growth stuff, same sort of thing. No real, a little bit of choppiness here, a little bit of resilience. This is the ARK fund, but no real major support yet. No real major bounce. We're trying here, so we'll see if we can get going. Maybe today is the start of something. I certainly hope so. And if you do have some broken stocks, maybe you try to, you know, sell some into the rally if we can rally here for more than a day or two. But certainly the overall trend is down, okay? I would say that, we're going to get to a lot of individual stocks, but last thing on some of these indexes, I will say that this is the XLP, which is obviously defensive stocks. The fact that this is getting hit now I'm not, you know, I don't want to say it's bullish because everything else is getting hit too. But now that and I know there's some news, it's tariffs, it's the dollar and all this stuff, but I just take it for what it's worth. I do think we're kind of getting, it's more like everything is in gear on the downside, which sounds bad. But the more things that get in gear, the more worry there is, and you could be, like I said, getting near sort of a shorter term low. So we'll see what happens. It's actually been underperforming the market here for a few days. Again, near term stuff. So we'll see how it goes. A couple of things here, just based on questions and what I'm seeing. This is Robinhood, HOOD. It had a big run on the weekly chart. The original breakout was about a year ago at $14. It broke out again around $25 in I want to say August, September, something like that. And obviously went up to something like 70, and now it's fallen by 50%. And I had a question today, and this is a common question. It's a good question because some of these things, it's one of these things, if you want to play or try to play a bounce, like listen, this thing can go from 37 to 47, which whatever that is, 30%, pretty quickly is my guess if things bounce, if we finally do bounce. I mean, it could easily bounce back towards its moving averages here, which would be a big gain percentage-wise. And if you want to try to play that, that's fine. The problem is, you could have said that here or here or here or here, So one of these days it's going to be a low, but just be aware of that. You're going to wake up one day in some of these stocks, hopefully it's today, where these things are up 10 or 12%. I'm all for it. But, it's a tricky game. So if you do that, my advice personally would be keep it small, keep it light. The big money is going to be made in the big swing during the next sustained uptrend, not playing every wiggle. I mean, if you can do it, go for it. But that's my general opinion, okay? Near-term stuff, this is what I was sort of saying before. This is Palantir, PLTR. You can see the stock fell very, very sharply, 125 to, 80 basically. Okay, call it 80. But since then, and let's see, that was, if I can track the price, that was February 28th, okay, was when it hit 80. So its low of February 28th was 80. Today it's at 85. The market's gotten hit a lot this month so far. So that's kind of like, it's early, it's so early, and the overall near-term chart, there's got to be a ton of overhead here, I would guess. But I'm just saying, the fact that it's kind of stopped going down there for a few days, you can see, is a small positive. Broadcom, it's not really bouncing much as I record this today, but again, you're kind of seeing this, it gets hit, but it's just kind of trying to hold and fight at the 200-day. This is AVGO. This is a little bit, this one's gotten this is VRT, which is your liquid cooling solutions. Again, AI stocks. The stock went from 150 to, again, down to 80, but again, it's just kind of, I don't know, 1, 2, 3, 4, 5, about 8 days in here where it's kind of stopped going down for now. What does that mean? Maybe nothing, but it's just something I'm flagging. Everyone wants it to bottom one day and just go up, 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 up. That's not usually how it happens. Usually if these things stop going down for a while. So there's some names out there. Take a look at some of these former high flyers. Other ones don't. They're still going down. I was just before this video looking at like Twilio, which was not super hot, but beautiful breakout, huge run, and then it's really gotten hit. But you can see it's still been probing. As of yesterday, it tanked to a new correction low. So, I'm not saying anything about Twilio, but you're trying to find something that maybe got hit into here and has been kind of chopping sideways since. That could be a small short-term sign of relative strength, okay? In terms of names, besides those sort of off-the-bottom names. So maybe, I'm trying to look for themes, of course. Maybe some cybersecurity. Some of it looks sick. This is Rubrik, which we've mentioned before, and it did get hit here, 80 down to 52. But today it reported earnings last night. Today, as I record this, it's gapping up nicely, okay? And really just the weekly chart, you can just see it's sloppy. I mean, it's all over the place, but, low volume, 3 weeks of low volume, sharp declines, but now it's looking like a big, heavy volume week, support week. Great growth, still accelerating on the sales side, accelerating earnings growth. Well, they're losing money, but, the losses are shrinking faster than expected, I guess. But either way, that's positive action. Okta, whatever, OKTA. This one I mentioned, 2 good days here, and it's just holding in here. So far so good. Do I think this is going to run away on the upside and go up 50% while the market's sick? No, of course not. But, the longer it can hold in here, the greater the odds that it wants to go higher over time. Okay, medicals, there's a bunch of them out there. I don't want to keep repeating them every week, but medicals, there could be a little defensive flavor there, but there's still some growth. This is Royalty Pharma. That looks pretty good. Garden health, sloppy and certainly not ready here. But again, you kind of had a few weeks down here, and now you're starting to see some, I don't want to say over the top volume, but some very good supporting volume this week. They had some good news. So overall, what you're hoping with some of these is now they can start to round out, and 3, 4, 5, 6 weeks down the road, they're ready to go, if the market is. TGTX, TG Therapeutics, continues to look good, up this week, breaks out last week, up this week as I record this. I mean, that's pretty good for this environment, okay? China, I mean, it's hard to trust it, I get it, and the trade war and all this, but there are a lot of good-looking names. This is Futu, which is wild as all get out, okay? Big correction, big comeback, but this is kind of like a smaller, like a Robin Hood of China, I guess, bull market type stock. Okay, and actually a nice consolidation in here. You'd like to see it calm down, which it's not doing. It's up 10% today. It's all over the place, 130 to 100. But, generally speaking, this is a sound pattern. If it can get going, that would obviously be good. C Limited, SE, has actually been in an uptrend really since August. So it's a little bit mature. And this, there's been a little bit of churning after earnings last week. But overall, it's above its 50-day line. Like I said, 80% of stocks aren't, or 70 or whatever. So that's pretty good. And Alibaba, okay, BABA. They tried to get going here back in September, based out, and then really ramped recently. And so far, you can just see holding. This would be what the stock would be doing, or what many stocks could be doing after this ramp in a very strong environment. So that's exactly what you're looking for. Could it still fall? Yes. So you can't ignore the environment, but so far so good on that. Okay, couple precious metal stocks, AG Alamos Gold. I'm not big on chasing gold stocks. I've been wrong here. So far this year, they're kind of straight up. So hopefully that continues. But, modest dips on some of these things. Wheaton Precious Metals, WPM. Some of them are streaming. Some of them are international. Some of them are more tied to the dollar if they're international, like South Africa and stuff like that. But so I'm not going to get into the minutia, but generally speaking, prices are up, silver, gold, all this stuff. And, you can do your due diligence, but the group certainly looks good. And just a recent IPO, I do like to look at the IPOs here. This is Standard Aero. It's just sort of in the aerospace space. HWM still looks good. So anyway, Saro looks pretty good. You're going to see it's bottoming out here. Still kind of thin, but you can see how it really hasn't been going down here while the market's getting hit. But overall, we're in a downtrend. We would be careful. We would be defensive. But keep your eyes open. I think we could be approaching a bounce phase. And if we get it, hopefully we can start to see, like I said, the wheat separate from the chaff. Okay, that's all the time I have for today. Thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.